Hi, this is Barry Rosen with Forecast Market Timing. Today I'm going to be presenting on commodity-related ETFs and stock picks for 2022. Let me tell you a little bit about myself. Forecast Market Timing is at Forecast.com. That's our contact information. I'll put it up again later. I've been started a commodity timing newsletter in 1987. I've been around for many, many years, and I moved into timing ETFs a number of years later. And more recently, I've kind of moved into developing many other ETF. I've been timing ETF sectors using the spider sectors like XLE and XLB and things like that. Because I tend to focus more on, because I can time commodities and their patterns really well, I tend to kind of focus on ETFs that I can time that way. However, everybody wants me to do GBTC for cryptos and other, XLK for, techs and things like that. So I've actually gotten very adept at all the other ones. And obviously we always have to look for what's moving best, which is what our presentation is about. So with inflation happening, we have to look for, there are a lot of commodities are very exciting, and there's a lot of opportunities for metals, energy, materials, and other key commodity related stocks and their ETFs. So we're going to be focusing on those today, and we'll look at the longer term stock market trends. We have trillions of dollars of debt in the world. Was it $45 trillion of debt in the world? Are we going to, people keep wondering, are we going to crash? When are we going to crash? I mean, everybody's kind of worried about it, especially over the last month. I don't think we're having a crash this year. Next year, I'm a little concerned. I do see kind of COVID finally wading into the background, maybe by March. I don't, it won't go away, just like AIDS didn't go away or viruses don't go away, but maybe the hype about it will go. And so we are going to be kind of entering a more golden era, at least this year, going into the summer. So where is the stock market going? I think we're in a large fourth wave on the weekly chart here, and it's usually these kind of fourth waves go in three parts. So we're going to finish all of the first part by next Monday, or it's in and we're going to congest, and we'll recover partly up in February. Usually those retracements are like 62%. So most likely maximum target would be 4730 on the S&P cash if we recovered. Depends how low we go. But then, so cycles in February look a little bit better, particularly into February 12th, and then you get a retracement, and then maybe you get another push up for, that kind of thing. And then in March, we're expecting another large move down, which might be equal to the first one. So by March, we're going to be at at least 4096, but we could be lower at 3976 or something like that. You can see that on the chart here. Nasdaq has been stellar and falling apart. If we're going to make a lower low by the end of the week or into early next week, our lower target is 13333 on the Nasdaq 100 futures. But we could go lower still into the March low, which would be maybe as low as 125.78. Now, people are very upset about their tech stocks tumbling, and there's going to be a lot of people trying to kind of bottom pick this week and next week, and they'll get something out of it, but then there'll be another kind of push outward, and that will lead to problems. So when we look at our long-term forecast, there's a nice cycle that we saw in 1987. It's a 12-year cycle. It kicks in this year in April, in the middle of April 2022, and it lasts in, actually it's April 2023. I just looked it up again. And that cycle usually tends to create a lot of inflation. It creates a lot of optimism. Sometimes optimism is false optimism. I've been looking for this inflationary cycle for a long time. It doesn't happen that often, and everybody's talking about it now, so it's not like it's something new, but it will continue to get worse, and it will not just go away, and it will continue, until at least April of next year, and then at some point it will create problems. Will it lead to a crash? I'm one of these people, I don't like to predict crashes. I haven't been predicted crashes. But when we look at patterns on the S&P 500, maybe we'll see 5145. It could be even higher than that if we get this inflation cycle. There's one more spur up, which would be a fifth wave on the weekly, monthly charts. And then you get something bigger. I've been around for many years. I was there for the 87 crash. I was there in 2002 to 2003. I was there in 2007 to 2009. We predicted the market was in trouble in 2007. So we're kind of, when we get these bigger retracements, they can be dramatic. Nasdaq last time fell 80%. It wouldn't be impossible, given $45 trillion in world debt, that the stock market could fall to 1,000, in 2023, 2024. It doesn't mean it's going to happen this year. It doesn't have to happen, but the powers that be don't really seem to have any control anymore. So the question is, I keep wondering why we'll get this final kind of push up on the stock market, which, should go from at least 4,000 on the S&P to 5,000 on the S&P. It could be a little bit less on a little bit more on the downside, a little bit more on the upside. But is it just going to be inflation? Is it just going to be, because people are so used to kind of playing this game, is it going to be the Fed's going to finally just say, oh, we're worried about crashing the market, we're going to stop raising rates? We don't know exactly what's going to happen, but it is an election year, and the powers that be somehow have a way of kind of making things happen. One of the big projections, I was looking for crude oil to get up to 92, and it's not that far away from there if you've been following crude oil. And I think we're starting to get projections to 102, 127, even 150. And if you remember back in 2007, when crude did hit 150 before, everything went up in price because the cost of transporting everything went up in price. So we've got, you can see inflation just coming from there, and then you've got these wild weather patterns causing food inflation. This is the cycles this year caused for more flooding and rain this year than usual, particularly starting in March, April for about a year, and that will mess up, crops. And we've had kind of major crop inflation, and that feeds into, the cost of feeding cattle and everything we buy at the grocery store. Natural gas, I think, is a little bit undervalued. A natural gas in Europe is outrageously expensive now. I don't know if you know, like German year-to-year inflation was 24% when their CPI came out a couple weeks ago, because their energy costs are so much higher than ours, and they're getting hit big time. I think natural gas, which is currently trading in the around 390, I think it closed today, could get up to 895, and that's going to be another kind of catalyst for energy inflation. We also, like I said, we have food inflation, just because you all see it at the supermarket. It's, grains are going up, meat is going up quite a bit, as you know, and the cost of feeding animals is going up. So all these things are going to keep snowballing. The cost of transporting food goes up, as energy goes up. And so we have a lot of things happening. And eventually gold and silver will finally catch on. They've been very slow because the bankers started playing with the futures market back in 2011, and gold and silver went down for many, many years, and because they were easily manipulatable, and despite many lawsuits that against Barclays and all these places that were manipulating gold and silver, and making billions of dollars, they paid their $1 billion fine, and they still keep doing it. So gold and silver has been a little bit, I've been using this story in my newsletter. It's like Charlie Brown and Lucy, where Charlie Brown goes to kick the football, and Lucy keeps lifting it, and he falls flat on his face. And I think gold and silver traders have been very frustrated. Eventually, gold and silver will catch up, just because they're real. You can actually, if you collect gold coin, if we get super inflation, if you have gold coins or junk silver, something like that, you can use that, as real tender. everybody's enticed by cryptos. We'll talk about them at the end of the presentation, but cryptos are, yeah, they're electronic. Well, electronics can fail, and electronics get regulated, and we worry that Bitcoin will eventually be regulated out of existence, but probably has another year. We'll talk about that later. This year we've done well with lumber. There's an ETF called Wood, WOOD. It's probably done. Lumber had 2 spurts. We just probably finished a B wave. It's probably done. We also saw the big rise in cotton, and that's also probably done. Cotton futures had been projecting 125, which is just unheard of price-wise. There's a lot of flooding. There's an ETF called BAL, like in bales of cotton, that has done very well. It's probably done. There's a chance that cotton will still get to 135 on the futures, especially if we have these wet flooding years again. So BAL might have a little bit more potential, but that one's done. So we have to look for other things, and then we'll be doing that today. So to me, crude still has the most potential as just natural gas. We've done very well with XLE. This year, we were buying it at 48, went up to 65. Now we're looking for 75 and 82, 82.50, could even get up to 90. So crude is at least easily projecting 92 short term, and then we're starting to get projections for 102 and 127 and 150. And as I mentioned before, when you start getting prices like that, we get massive inflation, but XLE and the oil companies are going to do well. And so we like XLE. Here's a check. Again, one of the things that we've been specializing in our ETF newsletter is we've been typing the spider funds. The XLE Energy Fund for spiders is quite popular. It's had a nice run. See, it got all the way down to 20, almost 22. It's tripled in price. It hit about 65. It's come back quite a bit. It was a buy. We were looking for 60.30. It got down there, on Monday. We're hoping it goes down one more time if we get a secondary low in the stock market into Friday, Monday. But it's on a mission, and it's going to go up to 75 next, and then it'll go up to 82.50. So even though it's a little overpriced, we like oil. We like oil stocks, and I think it's one of the things that's going to outshine. As you know, technology has been fading, and you have to kind of rotate. Technology has been making huge money for the last 3-4 years. I mean, and it's falling apart now, and people are buying it, and it's not done. We'll look at it in a little bit. Oil stocks, we like Hess Oil. It's projecting 113.60. The monthly chart in 2007 got up to 137. It's had a nice spurt the last day. You can see it had a huge spurt the last day. It's one of the better of the oil stocks. Let's hoping it pulls back into late this week, early next week. We can get some more, but it's one of the better oil stocks if you want to buy individual oil stock. We also like Valero. It's projecting 102 to 105 at least, and trading at 80 on yesterday's close. I don't know, again, I haven't seen where it is today, but another stock that, again, the oil stocks and XLE we like that sector, and the energy inflation is just here to stay. Oil and gas exploration with the XOP, it's the Green New Deal and the green, these stocks have still done well despite everybody trying to kind of dampen and legislate oil exploration out of business. There's still more room on it, probably to go to 133. So just have some more money to make in it still. We'll look at it next Monday if we get a pullback. It's still a nice 30% move coming. Okay, natural gas. One of the challenges with natural gas is that the crisis is really in Europe, but supplies are plentiful in the U.S. And the differential between European natural gas and U.S. gas is starting to get wide enough that it's people can make money shipping it, and so it is starting to happen, and it will eventually pull natural gas futures and natural gas stocks up. It's been a little bit frustrating for me. We're waiting for the front month, which is February. It's expiring this week, in a couple of days, to take out 409 to kind of confirm a major bottom. My technical indicators indicate that it has bottomed, and it's been projecting at least 605 short term, and the monthly chart projects at 895. I don't know if that's into next year, but here's a natural chart of natural gas futures. Again, we had that big run up to 650 last October, and when everybody was worried about the energy crisis, and if you have propane and you run you have to pay for propane. They were, it's just gotten absurd. But natural gas has come down quite a bit, and we like, obviously we like buying things that are oversold. Here's a chart of UNG, which is the ETF for natural gas. It's also been a little bit like Charlie Brown and Lucy lately. I unfortunately loaded it up on it. I bought it really early before it took off, and in the 13 area, and then I loaded up more at 19, and then it's kind of come back on me. But I still like it a lot. I think it's going to go to 25 easily. There is computer models are giving us 79% chance, which I don't agree with, for it to go to 1050, but it's still fairly cheaply priced. And as soon as natural gas cycles are strong, the next couple of days, next couple of weeks, as soon as the front month goes over 409, then we'll have a major signal. And so I think UNG. One of the nice things I like about UNG, particularly, it's a cheap stock. It's a cheap ETF. You can buy 1,000 shares and make some decent money on a move. So something, I think the downside risk to 1050 is not very much, and energy is just doing very well. Metals, everybody's kind of interested in. Not everybody's interested in metals. Everybody's been interested in technology stocks, and Apple and Amazon. And again, those things are kind of spent. And, if you've got in too late on any of those things, you're kind of licking your chops. And they're not done. Again, we don't think the technology correction is not going to be over until late March. Gold and silver cycles are looking strong until late February, early March. And technically, we're going to look at all the metals. Metals have been one of my favorite things. The very first thing I traded in 1987 was copper, and I've always liked the metals. I've always been very good with them. Timer Digest had me name me the #1 gold timer a number of years, not this year, but a number of other years. Short-term patterns. The problem with gold, I think it's gotten very slow, and I think we get so mesmerized by some moves in other markets that we kind of forget. We get bored with it. It will eventually get this big move that everybody's been hoping for. Short-term patterns are suggesting resistance at 1868 and 1881. I think the worst, gold has rallied enough that the worst downside would maybe be a double bottom at 1755, and I don't think that's even going to happen. Our spring target for gold is 1913 to 1920. Longer-term targets, again, as steep inflation hits into 2023, 2115, 2400. Will we see 3,000? Will we see 5,000? I mean, people have gone there, but we're not quite there yet. But gold has a way of just kind of coming through. Here's the continuation chart. You can see how it's kind of been driving us crazy with congestion forever. But we can see it as kind of a setup pattern that will eventually start kind of breaking out. And we're kind of at that place. Gold has given enough of a buy signal that we can feel better about it. And again, unfortunately, it's too close to our cycle high. We had a cycle high this week. At the latest, the cycle high could go into maybe Friday, Monday. The problem is that everything happens at these Fed announcements, and you get these huge ranges, and then they kind of they kill you if you haven't gotten in with a good risk reward. So it's a little bit late, particularly as we're going into the FOMC mini market, to be chasing gold. But we will get a pullback, and we think that's probably the last chance we're going to get in. GLD, which is one of the more popular ways to trade gold. I used to not like GLD because they used to lease a lot of gold, and it's a better ETF, SGOL, which is thinner in Switzerland, and they use every dollar that you give them to buy gold bullion, and I think it's a little safer. But for the longest time, I thought GLD was going to be a paper chase scam, and it still will be at some point. But it's got more volume, so lately I've switched to GLD. Short-term target 174 to 175, and that's very close. Longer term 180 and 182.50. It's not very much, but the long-term target, when if gold goes to 2,400, which could happen next year, then GLD will go up to 240. So I don't think GLD will take out 160. So I think the risk, again, is one of these things that we're looking for, kind of an oversold situation, something, and short term, there's not too much left in it, but the next pullback, which we'll time and tell you about in our daily newsletter, will probably get you in at a decent level. Again, silver has been even worse, with Charlie Brown and Lucy, and silver is one of my favorite things. It just hasn't gone anywhere. Futures kind of look like they're going to be in a trading range between $23 and $24. At best, if the Fed is market doesn't always react on these Fed days like we would like to. 25.20 is my upper target on silver if we get a positive Fed reaction tomorrow. I don't know if it's going to break, silver futures going to break below 22. SLV has been also kind of boring, but again, sometimes, you have to find these low risk opportunities. I mean, how many of you bought XLE when, it was trading at 22 to 25 because crude went negative? I mean, you have to obviously look for something that's kind of oversold, and SLV is more oversold. I really don't think it's going to take out 1980 or something here, which is possible if silver went to 2150, which would be the worst downside. I just, we are, by the spring, we're going to have these inflation cycles, and silver will kind of take off. Platinum, I don't know, for some reason I really like platinum. I feel like it's an early warning signal for silver. It obviously has commercial uses for catalytic converters, and the ETF for platinum is PPLT. It's called the Aberdeen Platinum Index. It's not as heavily traded as GLD or SLV, but I like the way it moves. It's something to watch. What I liked about platinum is that it did 5 waves down on the PPLT to 8250 region very neatly. So that means it's done, and it's not going to take out that region. And short-term support is at 9250, which, and then key first target 102 and then 105, but getting projected to 117. I like PPLT. Again, the problem with metals is they're topping this week, and it depends how, whether we get a reaction to the Fed or whether they, temporarily retrace more. But you should keep an eye on all the metals, because I think we're running out of time to get in, and they will. These inflation cycles, they're happening already, or they're going to get worse. Futures at least project 1150 into the March high. That will get PPLT up to 105. Eventually, we'll get up to 117. So something to watch. Copper, another one of my favorites. Copper futures are projecting 490 and 525. We've been in a sickly range on copper with between 460 and 430. It should break out soon. We would watch CPER and Freeport-McMoran. I think it's FCX. Copper, CPR. Copper. I didn't put a chart up here. In some ways, this isn't one of the reasons you can play this one is that it doesn't have the volatility to kind of freak you out. So it can be a buy and hold position. I mean, it's trading in 26, 27. Maybe we can get it a little bit lower towards 26. It's going to go at least to 32. It could go a little higher. I mean, it's, because it's a cheap stock, you can buy 1,000 shares and make some decent money on it. Okay, let's look at grains. Again, we said this year we have a wet cycle in the weather. It means there's going to be more flooding. There can be planting delays. One of the things that's also happening in grains is that despite all the media telling us about global warming, if you really talk to the meteorologists, we're in the Grand Mariner super cycle, which is connected to sunspots, and there have been no sunspots. And the last time we were in the Grand Mariner super cycle and the weather cycles was 1645 to 1715, and during that time the Thames River in London froze over. The end of that super cycle, like it snowed in August and the crops just didn't happen. So this is actually a global cooling cycle and not the global warming that they've been kind of pushing us on. And yes, one article I read said that, if the greenhouse emissions are really a problem, and there's a lot of science behind it, then the global cooling cycle is kind of neutralizing it. So I'm not sure we have to worry about the global warming that we're going to get. At least the Grand Mariner supercycle will neutralize it. But we do get all kinds of wild weather things happening during the cycle. It started in 2019 and it goes until 2043. It's a long cycle, and it means that we're going to have more crop failures and growing problems. And so, when you have these problems, you get food scarcity, and there are a lot of people that are, storing up on canned goods and getting their survival kits. And, we're having trouble finding stuff on the shelf sometimes, depending on what area you live in. Food is everything. So obviously feed costs go up. So there's some cheap ETFs, and they're easy to remember. Corn, CORN, is for corn, connected to corn futures. Soybeans, SOYB, another easy one to remember. And wheat, without the H, WEAT. So those, now they don't move a whole lot, but again, they're cheap. I mean, we're looking at a $6, $7, $8. I think WEAT closed at $7.80 today. $7.80. So you can buy 1,000 shares or 2,000 shares, and get the percentage move. Wheat is currently going up because of the Ukraine crisis. I think 13 to 15% of all the wheat in the world is grown in Ukraine. People are worried about what happens if Russia invades or we have a war there.
Hey, Barry, are you there? I think we lost him. Okay, everyone can hear me okay, right? In the chat live? Okay, thank you. Okay, I think he just lost internet connection. So hopefully he will be back in a couple minutes here.
David, can you hear me?
Yeah.
Okay, am I back on, or we don't know?
Yeah.
I guess I'm back. Okay, let me share the screen again. I don't know what happened. Okay, can you see the screen now?
No, not yet.
Okay, what's going on here?
Okay, now it's loading. Okay. Yeah, now I see your screen.
Okay, so let me get back to, what happened to my slideshow? Jeez. Okay, are you seeing it now?
Yeah.
Okay, it says wet cycles. Okay.
Yeah.
Okay, so what was the last thing you heard me say, David?
Oh,
You weren't listening. You weren't listening. Okay.
no,
Okay.
With the
I think
break,
it's okay. I think I know where I'm at, so I do apologize. I'm sorry. I don't know why the internet went down. It actually doesn't do that ever.
do you want to switch it back to full screen?
Yeah.
Oh yeah, crop cycles. Mike in the chat just said.
Okay. Okay. I'll go back there. I've got time. Okay. I'm just going to. Okay. We're back at. Okay. So I'll reiterate what I was talking about, crop cycles. So again, we're in the Grand Mariner super cycle, which we last saw between 1645 and 1715. The Thames froze over during that time. Toward the end of that time, we had snows in August and the crops never came in. So we're going to get wild weather cycles for a number of years because of the cycle. And if anything, global warming, some scientists say maybe neutralizing it. So we don't really have to worry about global warming, but we are going to get wild weather. Feed costs go sharply up. This year we're looking for corn without any problems to go to 725 just on demand. Beans project 1545 this spring and eventually on the monthly chart 1950. And wheat's been going up on the Ukraine crisis, 1899.25. So these can be traded with ETFs, corn, soybeans, and wheat. And we like them because they're cheap and you can just buy 1,000 shares, you can buy 2,000 shares, and you get some nice percentage gain with them. At best, wheat might retest 832 if you're looking to get in. We'll have to look for an entry on our timer, but so SOYB may have the best potential because it may have the biggest pullback at the moment. It's pulling back a little bit. Usually grains fall until the end of the month for some reason. The funds take profit, so you're looking at Monday as maybe an entry. We'll have to look at those. Here's a projection on soybean futures. An SOYB, which is the ETF for soybeans. It's had a nice run. Earlier it was at 18. It got up to close to 25. It came all the way back to 21. It's again surging again. We might be able to get in around 23.30. Looking for 27.43. Again, the percentages are nice because the stock is cheap. Another one I want to look at is the Global Natural Resource Fund. This is one I just kind of discovered, GUNR. I forgot who puts it out. It's not a spider fund, but it does cover things like timber, metals, energy, ag, and water. So you can, it's a nice basket because you get all the things that are important that are about to take off. Energy is going to be moving. Metals are going to be moving. Timber is probably done, although, it could come back. Ags are moving, and water, I have been looking at water ETFs. I mean, obviously water is the most important thing in the world, and there are people trying to corner the water market. So, but water's in this fund, so I think it's got a nice basket to watch. Fifth wave on this fund projects 48.40. It's currently trading. It's had this nice fall here. Got up to it peaked last week around 42.80, and it's come down about 10 to quite a bit here. If we can get it near 39.20 to 38.80, I think would be a good buy. We may if we get this secondary stock market low, we are looking for it to get up to 48.40. Let's look at rare earth elements. This is a personal favorite of mine. I mean, obviously, the world is addicted to electric batteries at the moment. All the major governments have this green agenda, and we need a lot of batteries. There isn't enough lithium or rare earth metals to make all the batteries they want to get rid of petroleum. So there's kind of a scam going on with that. But still, these kind of stocks are going to be bid up. I've been playing them for a while. They're getting oversold now. And there's something to watch. So rare earth elements is called Remix, REMX. It's a volatile stock for people who like volatile stocks. 3 ways down might be done around 93.50, eventually 91.50, major support 95. We're getting close to those levels. We may not get there. Again, this has been following the technology, which is Nasdaq. And again, if we're close to a bottom in Nasdaq, a temporary bottom, and we'll get a rebound on Nasdaq 100 to 60,000. And then we'll come down again to 12.5 or something on Nasdaq 100. And so Remix may have a nice bounce in February and then go back down. But again, it has a value. If they continue this whole green battery craziness, we're going to see 146.50 as an upper potential next year during all these inflation cycles. So this is Remix. This is not Remix. This is I'm sorry, I have the wrong chart. Cancel. So I assume you're still hearing me. I'm hoping, I think we're still on. So lithium is another high in demand element that's needed to build all these incredible batteries that people want their phones and for their electric cars. It's come down quite a bit. It's had this huge run. I mean, look at it from 20 up to 95. It's currently correcting with Nasdaq. I think again it's a 3-way pullback into March, which if we get it at 65 or 68, it would be a good buy. Still has room to go to the upside. It projects 127.38 into next year. So good long-term investment. I mean, I don't know if they're going to give up on their electric battery, electric phone hunger. And so I think it's a value stock actually. So it is coming off because it's just gone way too far, and it's certainly not going to get below 55. So we need to revisit in March. Okay, let's look a little bit more at technology. I'm done with my commodities, but everybody's interested in technology. I use Elliott Wave, and it really is good for measurement. And then I time Elliott Wave using cycles. So again, this week we're approaching a tech low, very oversold. We're going to get a big bounce. Traders can play the bounce. If you like, 2-week bounces or maybe an ABC, 4-week bounce, but then we're going to get another push down. So if you're an investor, we're looking at Apple at 135. Maybe we'll see that at the March low. Amazon is projecting 24.73 into the March low. That would, Amazon has incredible value. It is actually projecting to double even from 24 back up to 48.83 over the upcoming years. And, even their cloud system, could be spun off as a separate stock and be going for $2,400. So Amazon's most profitable area, of course, is the cloud, and it's valued quite high. And so if we get a pullback on Amazon into March, we're looking at 24.73. NVIDIA also has come off quite a bit. If we get down to 184, again, it would start having value. Again, all these tech stocks they've been up too long, and people are rotating. So NVIDIA might be a buy again at 184. And maybe we'll see that in March, but it does have a good long-term projection up to 510. I mean, so there's a good potential there, and that's in the Elliott Wave. XLK, very popular. One of my favorites. I'm projecting 129 or 125 by the March low. Again, it's going to put in a low this week and have some type of a bounce, and you'll get faked out. But I do think it will get another push down. Short-term traders, we'll see where it is by Friday, Monday. Again, ideally, we'd like to see Nasdaq get to 133.33, but if not, there's some signs that it's trying to bottom. Nasdaq 100 has to take out 148.85 to show us that we're not going to get a secondary low. And with the Fed, we just get all kinds of crazy things happening. Bitcoin, everybody's favorite. We do cover Bitcoin in our ETF timer. We timed the November high. I've been covering Bitcoin for 3 years now, and I've been very good at it. I made a ton of money on GBTC, which is the ETF for Bitcoin. Somehow I feel safer in the ETFs because they're at least protected by the Securities Exchange Commission. We always wonder about, as with all these cryptos. I mean, we've had exchanges vanish overnight, and been a lot of scams. I know people are all into making something out of nothing with these cryptos, and they're exciting. I specifically worry that cryptos will get regulated out of existence because the government will want to institute their own cryptos and put everybody on helicopter money. That's probably a scenario for next year. But I think my work on cryptos say they'll top out into April 2023. Maybe we'll see 85,000 to 94,000 during these inflationary periods. Again, they've had huge runs. I don't know. People's dreams that they will continue and take over the world. I'm not quite there yet, just because we've seen governments trying to regulate them out of existence. When they want to, they just do that. They did it with gold in the 30s, and then suddenly, they can just, and it's electronic. What worries me about cryptos, like if you buy gold jewelry and gold coins and you had to barter, if we had some craziness in the next couple of years, then you've got something to barter with, that's real, with your cryptos in the cloud someplace, if they vanish, so to me, they're not totally real. I think we can get away playing them for another year. Computer patterns are currently projecting 184.68 on the continuation futures chart. That's still a long ways down. People will be really going crazy. I don't have a low until mid to late March for cryptos. I do see them starting to go back up in around next April for a year or so. Be patient with them. People keep buying into them. And, you have to remember that markets are cyclical. And, we've been up 3-4 years in the techs, and, they're taking a rest, and they need to rest. They can't go straight up. I mean, there's just not any value anymore. Cryptos also need a rest, so we have to look for value. Here's the continuation chart. Earlier in the year, I thought, well, maybe we'll get back up to 5,000. But, now I'm kind of starting to, would be happy to see, 4,200, 4,300 for bounces in February. And again, I worry 2,800, 29,000 is kind of 29,000, 28,000 is what we're looking at. Okay, so I got through most of what I wanted to share with you. I do have time for some questions. My website, again, fortucast.com. I've been in business 35 years. You can email us at support@fortucast.com. We do have live customer service at 928-284-5740. Our ETF timer is on trial for $97, $297 for 6 months. Very reasonable. We cover 25 or 30 things in it, and plus we give you our financial timer once a week to time the futures on Sunday. So it's a great deal. If you want to email us at support@fortucast.com, we'll send you a free sample of our ETF letter so you can see what you are getting, and happy to help you out. Again, I'm kind of I've had to drink a lot of coffee to get ready for this presentation. I'm kind of a quiet, low-key guy, but I've been around 35 years. Timer Digest had me #1 timer in gold and even in stocks 1 year. So I've been through many things. Somebody want to feed questions to me? If David, I know I can't see the chat. Again, I'll have to see if I can get out of this.
Can you hear me?
I can hear you, David. Yeah.
Okay.
So if there are any questions, I'd be happy to take them. We can talk about some other things if we have more time. If there are no questions.
This was a few minutes ago. Someone said NVIDIA at 184. I'm not sure what.
NVIDIA. Let me double check if
NVDA.
NVDA. Yeah. Let me see if I have a bad typo there. There was so much stuff I was putting together today. Yeah, it closed at 220, 184. Again, it's going to have a big bounce, but it's come down from 350 all the way to 210. I don't think it's done, but it'll have a big bounce in February and then it'll come down again. Elliott Wave keeps me out of trouble. I mean, I use cycles for timing, and I combine that with Elliott Wave patterns, and the Elliott Waves patterns usually work. Most of the people that have trouble with Elliott Wave is they don't have any timing ahead of them, and you get these people that are looking for fifth waves higher on something, and they just never come in because the cycles change. And I look at the cycles and I filter out the bad wave counts. It's my claim to fame. Other questions, David?
Let's see. I am not seeing any other questions right now.
Okay. We do cover other spider sectors in our ETF timer. I try to talk about things that have value. I mean, I have like XLRE, which is for real estate. I still think the real estate sector's hot for another year and in a bubble. So XLRE will probably be one of the better spider sectors to cover. I had like XLB. I think it will hold up and come back better for building materials if as the infrastructure and building things happen. I'm souring on the banking sector, XLF. Although it's getting oversold, it may hold 35. Everybody thinks that with higher rates, the banking stocks will make more money, and we were looking for 48. That still may be the case, but again, everything has been overbought, and as we get into March and we get oversold levels, we can, probably make some money on some of these other sectors. Healthcare has been another popular one, XLV. It's come down quite a bit to 129, projected to 129. I worry about some of the things that are happening in the health industry. The Supreme Court ruling recently is, mandating vaccines for healthcare workers who in places where they take Medicare, which is just about everywhere. A lot of people are going to be quitting and going to places where they don't have to be mandated, like Florida and things like that. I think there's going to be kind of a crisis in the hospitals, and I don't think that's good for profitability. And so XLV, the healthcare sector, everybody really liked it, and it's come. I'm going to have to decide whether I do have some cycles from late March into over the next year, that inflation cycle that will help it come back, but I don't. It does concern me. Hospitals. We still have kind of a major situation going on. Okay, David, I'm early. I talked quickly because I wanted to make sure I got through all my material. Any final thoughts or questions?
I think that's it.
Okay, so thank you all.